Meta in 2 or 3 years is an easy double. I think that's a reasonable bet.
In today's video, we're going to be listening to Mohnish break down his thesis in Facebook. Now, this is an interview done by Divya from SumZero about 4 months ago, and there's been some big changes in Facebook since then, and also a rise in interest rates as well. The market cap's dropped off well over 100 billion since this video was made, so bear that in mind as well. We've also seen a raise in the interest rates from the Fed since this video was made as well. Now, with that said, without further ado, let's jump on over and listen to what both Mohnish and Divya have to say about Facebook.
And we have a Meta market cap, I checked this morning, of 586 billion, and then maybe if you take out like 50 odd billion of cash, you get to like enterprise value like about 536 billion, and then net income is 40 to 45 billion type of run rate, and then they're spending about 10 billion on Meta. So if you add that back, real net income is like kind of, let's say, 48 to 53 billion kind of number. So it's basically like 10, 11 times net income. I prefer to use net income over EBITDA and all that because my friend Charlie has various 4-letter words he uses when people are talking about EBITDA. So
yeah, I think you would understand any presentation using the word EBITDA if every time you saw that word, you just substituted the phrase bullshit earnings.
But basically, 10 or 11 times, one would have never thought we'd get to, on trailing earnings, get to that sort of valuation on a business like Meta. And, but on the other hand, one of the things when you look at it, I don't think there's any other company on the planet, any of these other, large techs that have 3.6 billion users. I think the next two combined might not get to 3.6 billion. So Facebook Meta is in a very unusual situation because 3.6 billion, the total number of internet users is 4 billion. When even though I don't own the stock, obviously I use Facebook, what I found extremely compelling about Facebook, I mean, when I look at the shirt I'm wearing, this shirt came from an ad Facebook served. And I have about 20 of them. And it's the only shirt I wear. And I mean, I pretty much redid I'm wearing shorts. You can't see my shorts, but I have only one type of shorts, which also came from Facebook. And these are brands that I would not have found. So pretty much if you look at almost everything I'm wearing, it actually originated. So I think their ad platform is incredibly good at targeting. I mean, just literally, the kind of stuff I get served up is amazing. I mean, literally, like they can read my mind, and I think we've seen that, and some of that got hit with the Apple privacy issues, but it's been right on. I think it's been just incredible. So I found Facebook very useful from content being served up, which was generating revenue for them, but it was very relevant to me. When I look at Reels, I do not find the ads relevant. The real ads are like me watching, broadcast television, some beer ad being served up or whatever else. And I don't drink beer, I'm a teetotaler. My situation when I look at Facebook is that I see a company that revenue is not going anywhere. Their cash flows are not going anywhere. I think those are pretty solid. I think the user base is pretty solid. So if I were to look at Facebook, I would say that even with 5 or 10% annual growth, which doesn't really seem like a big leap for them to get to, the stock ought to be a double at current interest rates. So I don't have any issue with saying that, Meta in 2 or 3 years is an easy double. I think that's a reasonable bet.
Now, there's one key thing we want to remember there from that little clip was where he said at current interest rates. Now, we have seen interest rates rise quite dramatically since this video was made. Well, not dramatically, they're still at all-time lows, but we don't know how far that's going to go as well. If inflation keeps going, then interest rates will need to keep rising in order to try and curb that inflation. So that's something you need to bear in mind as well when you're trying to evaluate Facebook.
When we look beyond that, if you're looking for something more than a 2x, I tend to be skeptical because the way my mind works, everything related to Meta is an option I'm not willing to pay for. So whatever they're spending on Meta and whatever they're claiming, in my opinion, I don't think Facebook themselves understand what Meta is. I think they throw a lot of words around, and I think we will, as a society, maybe in 5 or 10 years, have some semblance. And one of the things about these leaps, these technology leaps, Meta is a very big technology leap. If we go to Google Glass, right? So Google Glass, I thought, was a revolutionary product, a big leap forward, very strong technology, and almost, I think it was. So I think when you get to the ergonomics and what users are looking for, if things are even slightly off, they won't work. Meta is going all in on one bet, which is the exact opposite of what Bezos does. Bezos never went all in on one bet. He only went all in one bet right at the beginning on books, and then very quickly started diversifying those bets and went from there. So from my point of view, I cannot give credit to Meta to take VR mainstream. The gamers will go for it. The early adopters will go for it. A lot of cool factors on that front. But for them to go from that 10 million to 1 billion devices, that is a massive leap, very big leap. And we don't. So what I'm trying to say is that all I can do is I can say, okay, I know it's cheap. I know I can get my double. I know getting my double is low risk, but then let me go 2-3 years and let me see what they've delivered. Has the 10 million number moved to 100 million? What are the next versions looking like? Are the non-gamers buying this? Is, the housewife next door, is she buying it?
Hope you guys got some value from that. Definitely drop in the comments below your thoughts on Facebook.